Welcome to Guardian Capital's market outlook discussion for the month of October. The agenda is to discuss four things. First, education, that is our thinking framework. Second, earnings, that is how the companies have performed for the period. Third, valuations and expectations, that is how the market is currently being valued and what are the expectations moving forward. Fourth, the sectoral view. Our first principle is that over a long period, earnings growth determines 80% of the returns. In this slide, we wanted to focus on the two red circles below, which indicate that over the last 3 decades for BSE Sensex, price has been growing at a 12% per annum, whereas earnings have been growing at 11% per annum, which means that there is a direct correlation between earnings growth and price growth. Continuing on the first principle, the remaining 20% of the price returns is determined by revaluation growth. Say in the last 10 years, Asian Paints has gone up by 19%, out of which 17% was due to earnings growth, which is our 80% rule, and the balance was due to revaluation. Revaluation means people were willing to pay 43 rupees for every 1 rupee earned by Asian Paints, but now they are willing to pay 51 rupees, which accounts as revaluation growth. In this slide, we want to highlight the importance of extra 1% of return generated. Let's say we invested 1 crore today for 30 years and assuming a return of 11%, we would end up with 23 crores after 30 years. However, if we generate just 1% more, we would end up with 30 crores instead of 23 crores. And for a 3% more return, that is if we generated 14% return, we would end up with more than double of 23 crores. This is the power of compounding. Now to the second segment of the agenda, that is earnings. In this slide, we are showing the performance of the BSE 500 companies, excluding banking and financial companies. If you look at the highlighted tables, the revenue growth for the last few quarters have been slowing down compared to the average of the last 5 years. Whereas for the small caps, there has been degrowth in sales. So this slide indicates that for the recent quarters, the earnings for the BSE 500 companies have been slowing down. Moving on to the third segment of the agenda, that is how the markets are currently valued and what should be our expectations going forward. The BSE 500 is overvalued by 14%, and assuming a revenue growth of 11%, which we have seen historically, the Guardian expectation is that we can assume or we can expect a returns of 8% for the next 5 years in BSE 500. Whereas the large cap index is overvalued by about 12% and the expected earnings is around 9%. Whereas the mid caps are overvalued by 18% and the expected returns is around 7%. The small cap is more overvalued and at 23% and the expected returns is quite low at 6%. Banking and finance is overvalued by only 3% and the expected returns is 10%. Moving on to the final segment, that is the sectoral view. Though in the previous slide we concluded that the market is currently overvalued, we do see pockets of opportunity in 3 sectors, considering the current valuations and the revenue growth, that is historical as well as the last 4 quarters. We see opportunities in gas transmission, media and entertainment, and banks, in total which constitute of about 13% of the economy. Investment in securities are subject to market risk. Please read all scheme related documents carefully before investing.